Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia as well as Aisha Faridi. We started off on a great footing this morning, but since then we have let off some of the steam, and I say that because we are 60 points off the highest point of the trading session, but not much to complain given that we are much above the 17,700 thereabouts. The broader markets are doing quite well for themselves today. In fact, they are performing better than the headline index, but it's a bank Nifty again which is on the back foot. So after the outperformance that we saw last week, that seems to be now normalizing, because you have the bank Nifty which is just underperforming a tad bit. Having said that, a lot of news flow coming in from the currency market as well. Rupee has been showing quite a bit of strength over the last 2-3 sessions, and that seems to be happening today as well. It's sub the 8150 mark. So a lot of cues to talk about, but Aisha, at least the good part is this is a very broad-based recovery that we are seeing today. Most of the sectors are trading in the green, barring a couple.
Oh yeah, absolutely. Infosys doing the trick, holding up nearly about 2% as we speak right now. Reliance, ITC, they're all participating in the rally, as are the HDFC twins. They're also holding out quite okay. Having said that, I mean, it's good to see that the Nifty has managed to scale up to the higher end of the trading band that we've been struggling in for just so long and dragging our feet within that. So 17,800 at least back for the futures. And yes, a big overhang for the market gets lifted. Look at the recovery that's played out all through last week, or for that matter even today in the Adani Group of names. Adani Enterprises now holding up 6% as we speak. There's of course Adani Ports looking very smart, Wilmar, Ambuja Cements. The entire Adani cluster is looking very, very smart indeed in a trade right now. So that holding out well, but what's not also is, after the CLSA note, Britannia, which is down 2.25%. Z continues to see a bit of pressure, down about 2% as we speak right now. And some of the metal stocks are the ones which are the underperformers today. So Jindal Steel as well as Tata Steel being two such cases in point. Tata Steel is now down about 1.5%. There's also JSW, which is currently lower by about 1.25%. But keep your eyes closely on a couple of large cap names, namely IndusInd, Kotak, ICICI Bank and SBI, along with L&T, because they are the ones which are lying flat, and because of their combined weightage on the index could move anywhere, this or that. But for now, we're holding out well in the green. Let's then take perspective of what or how the FI community is viewing India right now. We have with us Mukundhan Siva, the co-founder and MD, India Avenue Investment Management, joining in on the show right now. Mukundhan, great to have you in the studios, and I guess you're coming back to India after a long hiatus of 3 years. What's changed besides COVID off?
Well, I mean, there are no evident signs of COVID today, but I think one thing that immediately strikes the mind is infrastructure. The amount of infrastructure that's happening in Mumbai, which is witnessed by the traffic and the conditions.
And the AQI levels.
Yes, correct, is amazing. And everywhere we went, there are more roads, better highways. The metro is going to have an obvious impact. So it's there. It's evident that the story is there to be played out. Obviously, it's going to have challenges along the way, so that needs to be addressed.
But you've been in India for almost now 3 weeks, and you've almost done an India darshan. So aside of Mumbai, what have been your other key takeaways? If you had to do a SWOT analysis for India, the strengths and the weaknesses, the opportunities and the threats, how would you classify them?
Yeah, I would say this global slowdown or recession that might be imminent is going to pause India's recovery to some degree. And that's a bit of a pity, because I feel that when we talk to the businesses, founders, management, we get this feeling that there's a vibe that, they have capacity, they want to step in and take part of what China was doing before, the whole China plus one thematic. And India, it was probably India's moment, but it's just going to be delayed a little bit, I think, rather than, set backwards. So it's a matter of waiting for that moment. And this sell-off a little bit, if you would call it that, is probably providing another good entry point as a foreign investor.
So providing a good entry point, so which are the areas that you're the most bullish on? I see that in your portfolio, you're quite overweight when it comes to financials, IT, etc. Is there where you're adding more into your portfolio?
I think it's a mix. So the way we look at India is, we know that we can't pick Indian stocks sitting in Australia. So what we do is, as a process, we tend to hire locally based investment managers as our advisors. So our portfolio tends to be a subset of their thinking. And generally, yeah, at the moment, information technology, we're a little bit more bullish, let's say, than the street, because we're not taking a view of just the US recession and slowdown. We're taking a longer term view that that's a space where Indian companies can continue to win market share. Pharma will probably be a similar story over time. Yeah.
You know, we had Rajiv Jain of GQ Investments on the channel in the morning, and he's put in about $1 billion plus, about $2 billion into Adani Group of stocks. He believes that the renaissance for Indian infrastructure has arrived. This is no longer a complicated sector, it's an easy sector, and this could be the high growth sector for India in this decade. You don't have infrastructure stocks in your portfolio. Why is that?
We have some exposure to infrastructure, and but I wouldn't say direct, like the Adani Group type exposure. And that's because, I guess, from a transparency point of view, it's been a difficult industry. So we have tended to play it more through ancillaries, you know, might be cement companies, or it might be other aspects of infrastructure, pipes, areas like that, rather than specifically a pure infrastructure play. But I think as that becomes more transparent and as we get sort of more color, then there could be some direct plays also in the portfolio.
There would be an election cycle next year. And markets, at least Indian markets, last 3 election cycles, 6 months ahead of the election, they get into a hibernation mode. Do you think this time it could be different? And what is the importance for you? Because if you have to invest for a couple of years, then there could be volatility because of 2024 election cycle.
So as you would have witnessed over the last few years, there's been 2 markets. One is foreign investors and local investors, which are quite different. So from a foreign investment perspective, I think I hear in India a little bit of bearish thinking around, you know, macro is getting more difficult. But from a foreign perspective, you have to remember there's no other economy in the G20 that's going to grow at the pace that India is. So I would think the next few months are a bit of a pause because China was so undervalued. So there's a little bit of interest towards, let's play, you know, cheaper, less value orientation. But I think investors will come back for India at probably some point later this year or into next year.
Would it be the obvious names, more of the same that they would be tempted to pick, IT, banks, financials? Or would you think that maybe infrastructure, considering, you know, you yourself have observed things on ground, is that going to be a big attraction point?
No, I think that's a good point. The story of the last decade, which was low interest rates, growth companies, high quality ROEs, that's still always going to be attractive, but valuation will be more important going forward. So, you know, when you have higher interest rates, that acronym TINA is not the same anymore. So people will be looking to buy the growth story, but not pay too much for it.
So if a client watches you on ET now and says, look, you know, Shiva, I love your interaction, I like your thoughts, here's my money. You can invest it the way you want, no question asked. I can digest a 20% volatility, 15% downside. But my friend, you could double my money in 3 to 3.5 years. How would you invest that? No questions asked, 3 months, 3 years, 3.5 years, double the money.
Yeah, so look, I think the number one story for India is this manufacturing, the PLI scheme, and outwardly facing businesses that can also benefit from local scale, but also benefit from what they can pick up in market share around the world. So for me, any business that has the benefits of a strong capability locally, but has external presence, that's where the money will go. You know, 3 years ago at the end of 2020, the index was full of consumption and banking names. I think that will look different by 2030. So this transition towards perhaps where we were in 2008, where you had more capex-oriented businesses or manufacturing businesses, that will take place.
Did you meet any of those companies on your recent visit?
In fact, I think most of the companies we met were in the sort of infrastructure, manufacturing space. We did meet with ICICI Bank and Mahindra, but that's also showcasing the India story. We can't neglect that those sectors are important.
Well, absolutely. But you talked about the FI view on India, and of late we have seen, in fact, for many months now, we have seen the FI outflows happening in India. And since we touched upon the Adani issue and they have a large presence in Australia as well, how's the FII view on India changed with the entire Adani stock, or has it changed at all?
So in our fund, we don't have anything else but an India fund, so we will keep investing regardless. But I think most Australians and New Zealanders invest in India through an emerging market fund. So today, it's simply a case of India's had a fantastic period, and there is some money coming out and going to other markets, which will return. In terms of the Adani exposure, there was obviously concern around the name because people don't read the good news, they only read the bad news. So, there were concerns around what is this group, how have they got to this position, where to from now. But our view is, at the end of the day, you want to own the India story. You're obviously conscious of the valuation, and it's not going to go away. That's what we keep telling people. It's not a 12-month story or a 2-year story. This is a 5 to 7 year story.
Which cricket team do you support? India, Australia, or you have a choice to support Sri Lanka also?
Yes, you've done your research. It depends who's winning. No, I think, look, the heart of hearts belongs with Australia on the cricket field, but India is probably my second favourite.
No, Sri Lanka?
No,
Yeah.
no. I think those days are gone.
Just to wrap it up with one final question, what are your return expectations in dollar terms from Indian markets from next 3 to 5 years? Because unfortunately, the natural direction of the Indian currency is always southbound. It's never northbound. It may remain in a range for a couple of years, but then just one bad year and it goes down 5%. In dollar terms, what are you indicating to your clients in terms of India returns now?
Okay, so I'm going to answer this from an Australian dollars perspective because that's quite different to US. Australia is a commodity-driven currency. So when commodity prices rise, the currency is strong. And so India is actually a perfect hedge for an Australian because it's a commodity importer versus an exporter. So, when we talk about returns, yes, we know that today commodity prices could rise and the Aussie dollar might do well. But it's also from a portfolio perspective, it makes sense to own India. Like it does for a Canadian or a Norwegian, anywhere where the economy is influenced by commodities. So from a return perspective, it's kind of difficult to pin without a horizon. But I would say, the first 6 months of this year will probably tread water for a while. And then after that, I think the story will pick up again. There is definitely increasing interest from the foreign community. It's now a matter of, I don't want to pay excessive valuation. So I think the next India 15 times earnings moment, you'll probably get a flood of money coming towards.
Okay, on that note, we'll let you go. Have a great rest of the trip here in India. Good to have you on the show.
Thank you.
On that note, we're going to take a very quick break. We're still holding on to the gains. Yes, slight bit of underperformance when it comes to cement or for that matter metals, but the rest of the sectors are clearly making up for that. We'll take a very quick break. When we come back, we'll have our charters join in on the show.
All right, now let's talk technicals. Kunal is there, and Kunal has just been looking at the laptop. कितना लिया बेचा अभी? कुछ तो busy कर रहे होगे ना?
कुछ नहीं किया, account से कर रहा था.
So you're booking profit of the money you've made in last 2 days.
No, I'm checking my emails.
What are you doing? I mean, what should one do now? Should one go home, take a risk, come back on Wednesday, with the assumption that you will get a gap up or a good start?
No, I think so. One should frankly not play for any kind of a gap in this kind of a market. And if there is any kind of a gap, then on the upside, it will be just maybe 40-50 points on the Nifty. That's the best which I'm expecting on the indices. The view which I mentioned in the morning as well, that when the Bank Nifty opens up higher at 41,500-700 zone on the spot levels, that's a very good zone to book out profits. I would still maintain that stance on the banking index, specifically on the Bank Nifty. We've booked profits in the morning, and I'm not looking to initiate any major trades over here. So I think that's what a short-term trade could be looking out for. Maybe if you are looking at building up long positions on the stock specific, you can carry forward some of the positions. But I think remaining a bit more lighter than the last couple of days is a much better strategy rather than being a bit more heavier.
Suresh, it's holiday tomorrow. Go home with long positions, come back on Wednesday morning, sell higher, or don't go home with long positions, cut, don't take a risk, come back on Wednesday, look at the situation and trade again.
So, say over the last 2 weeks also, going long has been good if the sectors and the stock picking has been good. So the view remains same, go with the longs. So for example, say the places we were hiding in, whether it was Power Grid, NTPC, the oil and gas pack, they've all done well irrespective of the markets. And I think we are in the same situation right now. There are places where there is leadership. So you don't want to be in any other space. So if your stock selection is fine, you're okay with the stocks, do not worry about the volatility till the time you're in this trend. So we've created a base at 17,300, 17,300, 400. Now we again go back to that 7,900 to 18,200 band, which becomes the resistance. So that's the point of time where you want to be going on, say, a lighter position, irrespective of whether you like a stock or not.
Okay, maybe a bit of profit booking, at least that's what we are witnessing because we are at the lowest point of the trading session. Again, not a huge gash down or anything, but just that we have lost almost 80 points from the highest point of the trading session. Before we go to Gaurav Sood, Nuresh, I wanted your quick take on some of these counters which are buzzing. Aptus Value Housing, which is suddenly up 18%. JSW Energy, which has been showing traction for the last couple of days, and then MGL, which is of course reacting to that acquisition news. And we spoke with the management who said that they're expecting a revenue profile of 2,000 crore from their latest acquisition over the course of the next 7 to 8 years. Your take on these three counters?
Something which I don't track very closely, but when I look at the chart, the stock has drifted from 340 to almost 240 over the last 3 to 4 months. So that was a very sharp fall, slowly and steadily. So today's bounce back is just a one-off move as of now. So would wait for some more time. JSW Energy looks interesting because, like the whole power sector, the stock has corrected quite a bit. The same base around 200 and 220 was the low in June of last year. Tested the same levels and now making a comeback. Very similar to Tata Power, wherein the lower base is holding on. So JSW Energy looks interesting. The stock has more upsides towards 300 to 330 levels. MGL continues to be a stock just on the radar, like I've been mentioning on the oil and gas pack. This has finally broken out above that 900 mark. And the stock is now setting up for a move slowly and steadily towards a target price of closer to 1100 in the medium term. So a Mahanagar gas on dips from here on also would be a buy.
Remains a buy even on dips from this level because 1100 is something that Nuresh is expecting on the same. But now let's welcome on board Gaurav Sood, the Managing Director and Head of Equity Capital Markets at Avendus Capital. Gaurav, hi, good afternoon. Thank you so much for making time and speaking with us. Well, you head the ECM team, so you're best placed to help us understand what's happening in the primary market as well, because over the course of last 6 to 8 months, we had seen a bit of a dry spell for IPOs, but it seems to be picking up now. What's your take of how things are lined up in the coming months?
Hi, good afternoon. I hope I'm audible.
Please go ahead.
Yeah, so on primary market, of course, as you mentioned, there has been a little bit of a dry spell for last, I would say, 12 months. But what we are seeing is that periodically there are times when we are seeing strong primary market activity. End of last year was one such example when we saw about 10 to 12 IPOs hit the market. We've seen secondary market activity for blocks, where over $8 billion worth of blocks got traded last year. And even this year, we are seeing good appetite for secondary market activity for blocks from led by promoters and sponsors. So we think, this is definitely not a year like it was 2021. It is different from 2021. But there will be periods during the year when you will see strong capital market activity. And unlike previous years, when ECM activity was driven by foreign inflows, we are very happy that domestic investors are supporting large transactions, whether it was the LIC IPO last year or even large blocks. Domestic investors are continuing to support strong companies and strong managements. So we are not too worried, and we think this is a year where a lot of IPO bound companies will prepare themselves, and hopefully sometime next year we'll get into the process. And second half of next year, you will see a lot of listings. So you will see ECM activity on blocks this year. There will be QIPs as well for certain sectors where capital is required, specifically CAPEX related. And IPO, we think mid-size IPOs with reasonable valuations should hit the market in certain time frame of the year. But a lot of companies will start preparing to hit the IPO market next year.
In preparation of next year, perhaps we'll see that kind of IPO action this year, and the next half of the coming year is something where you see the action building up again. But you talked about how block deals, etc., are expected to pick up in this year. We've already seen over the course of last 6 to 8 months there have been a lot of OFS or even QIPs and block deals that have happened, wherein the erstwhile anchor investors, etc., have sold out stake as well. And the street has become a tad bit more tentative in terms of the absorption of such supply, because these are now taken as checkout points for some of the PE investors, etc. How's the momentum there, and what kind of action do you expect going forward?
So I do, I think I resonate with you to the extent that investors today are more circumspect investing into, block deals or, secondary market options, or that way even in IPOs. But we continue to believe that at awareness that strong management, strong stories will have reception in the public market. And, the proof of the pudding is in the fact that over 10 billion worth of blocks have got traded just in the last 6 months. So, for the right stories at the right valuations, there is a lot of interest. And if you see some of the shareholders that have come in recent blocks, that's a mix of high quality global FIIs plus very, very strong demand from domestic mutual funds. So we are not too perturbed that investors will not look at these situations. As long as there is a strong investment rationale and a compelling story, there is appetite for these stocks. And if you compare some of these stories, the valuation is significantly attractive or cheaper than what the valuations were in 21. So, if you've seen the listing track record of these companies now for 4 to 6 to 8 quarters, and the valuations are cheaper than what they were in 21, a lot of investors are willing to bite for large size of investment in these companies.
Yes, so the over exuberance that we saw in 2020 or 2021 with respect to participation, that has ebbed away, and as a result valuations too have become a lot more comfortable. Gaurav, could you give us more insights in terms of which sectors are we likely to see more IPOs or these block deals, etc. in? Because is it going to be manufacturing, industrials, because that seems to be the flavor of the town even when it comes to the secondary market at the moment. Is there something where you are seeing a lot more interest from promoters to offload some stake?
So I think IPOs, as I said, in terms of size, it will be more mid-sized IPOs, and mid-sized IPOs, a lot of them are on manufacturing and industries. Even if you see the list of DRHPs that have been filed with SEBI, which are more than 200, 30-40% of those would be on the manufacturing side. So that continues to find interest both with institutional investors, and a lot of companies now have achieved that scale and size that they are looking to tap public markets. So on the IPO side, that is one space. Besides that, we think there will be selective interest on defensive sectors, pharmaceutical, pharma, probably a couple of IPOs you'll see on the consumer side as well. You might see a couple of REITs. So those are the initial public offerings that you should see during the course of this year. At attractive valuation, select financials could also get done. On the block side, we think the list of universe is much wider. And across sectors where companies have done well, they have interest from institutional investors, whether it's tech, consumer tech, fintech, whether it's industrials, auto, pharma. Across sectors, you can see block deals. Last year, if you saw 10 billion worth of block deals, they were across sectors. So no particular sectoral trend in blocks. But what I would again say is strong management and strong stories after the IPO for 4 to 8 quarters will find renewed interest from institutional investors.
Okay, so that's the take coming in. Thank you, Gaurav, for joining us today. So IPOs, manufacturing is a big theme to watch out for. Similarly is the case with pharma, though as far as the block deals are concerned, it's going to be very broad-based and company-specific. Okay, so that was the word coming in from Gaurav, but let's take the closing trades as well from our technical experts. Kunal, you go first. What are the trades that you are executing at this point of time?
So I'll reiterate the buy, which I had, in fact, the call which we've taken last week as well. AB Capital was the stock which we managed to latch on to at much lower levels. Would continue to be bullish on the stock, and I think even at current levels, I would expect that the stock holds a lot of upside from current zone. So that's a stock which I would look to be bullish on, as well as looking to recommend to our clients as well.
Okay, so that's the take coming in. But Naresh, what about you? What's on your radar of execution of trades at this point of time?
So that is Tata Power. The stock is coming close to that breakout of 211.12. Went above those levels today. So this is a stock which looks like setting up for a move towards 230 to 250 levels in the short term. and it has consolidated well for the last 1.5 years. So looks pretty promising on a risk-reward basis.
Okay, Nuresh, thank you so much for that closing trade. Tata Power is something that he likes at this point of time. In fact, overall oil, energy and power is something that Nuresh has been spotting for us of late. Time now to slip into a very short break with the news that the market is at the lowest point of the trading session. We'll track the last 30 minutes when we come back. Welcome back. Well, overall, sectorally speaking, we are doing quite okay because most of the sectors are trading in the green. It's been led by energy because Adani Transmission and Green are sitting with gains of around 5%, followed by GAIL. GAIL, of course, is in focus because remember that PNGRB revision is expected to happen today. So we are following up with respect to what's happening with GAIL as well. Secondly, you have the IT sector, which is also doing quite well today. So names like Emphasis, LTI Mindtree, and then the large cap names like Infosys, TCS are doing quite well for themselves. Even the auto space is seeing quite a bit of traction. Motherson Sumi is, of course, in focus on account of the acquisition of their wholly owned subsidiary, wherein they have taken around 1.5% stake more. But you also have Tata Motors, TVS Motors, etc., which are gaining and trading comfortably in the green. But what else is happening in the market and how should one look at making the most in terms of generating the maximum amount of profits? Let's try and understand that with Mr. Deven R. Choksi of KR Choksi. Deven, hi, good afternoon. Thank you so much for making time and speaking with us. I wanted to begin by asking you about the Adani Group of companies. Now, over the course of 2 to 3 weeks, we have seen a reversal of sorts, and all of these Adani Group stocks are up anywhere between 45 to 80% from their 52-week lows. Do you think now the worst is over and from a risk-reward perspective, it's become a lot more palatable after GQG has checked into these counters?
Yeah, good afternoon, Anisha. Obviously, from the financial point of view, fundamental point of view, we were always very clear about the infrastructure assets which Adani Group is holding. And we have always suggested that I think these are the assets which are hard to create in a shorter period of time. So I think that point is getting validated with the purchase or the investment happening from investors, I think, overseas. As far as India part is concerned, according to, I think the market was probably sentimentally negative. And as a result of which, I think they have been punishing these companies without knowing the fundamentals probably. Maybe I think the technical shorts which they created, they have now resulting into, I think, the short covering, as a result of which I think the market prices have stabilized. If you ask me, I would think that with the assets portfolio across the group, all infrastructure assets put together with a capacity to produce more than 50,000 crore worth of EBITDA in a year, which is growing at the rate of around 20% plus. I would think that these assets are themselves, I think, capable of paying back the debt of 3.5 lakh crore in 4.5 years time from now. So from that perspective, I'm reasonably safe as far as my assumptions are concerned in investing into these companies. Maybe currently the market is experiencing the short covering led rally. At the same time, I think fresh buying happening from some other investors on the momentum basis. That's where I think the stock prices are up. But otherwise also long-term investment for likes of insurance companies, pension funds, they probably find this kind of assets hard to get in any part of the world, which they are investing now. So it's a happy situation.
From a long-term perspective, you remain a buyer in some of these infrastructure names which are backed by strong balance sheets, etc. as well for the entire Adani Group. But the way you talked about how probably we are seeing a bit of short covering on the Adani Group, but what about the market as a whole? Because we have managed to gain what, almost 400 to 500 points over the course of last week itself. Would you call that as well a bit of short covering move, or do you see some positive momentum build up and buyers coming back into the market with a lot of interest?
I think in the cash market, I would say investors would have bought at a lower levels had they been allowed to buy against the sale position that they create on the same day and same time. Unfortunately, under the new regulations, any sale transaction that you do, I think materialize into buying opportunity or availability of your funds next day only. So suppose if I sold today, I get my credit tomorrow, and then only I can buy from not today but tomorrow. So that's where I think the technically market in the cash market remains slightly weak because of this reason. And that volume is shifting to derivative markets. So I don't know, I think, but I feel that I think if these technical hindrances are not there in the market, quite possible, I think we would have seen the rally in the market much earlier. I firmly believe that I think some of the infrastructure stocks, some of the good quality long-term stocks which are part of index, etc., where the FPIs are selling largely because of the weight adjustment that they require to do in their portfolios. Indian investors would have bought it had this particular situation remained absolutely normal on the marketplace on the technical side.
Address some of the stocks which are in news as well. Mahanagar Gas, of course, is one of your top gainers when it comes to the F&O basket. The company is acquiring Unison Enviro for 530 crores. This is the first inorganic acquisition coming in from Mahanagar Gas. We spoke with the management who said that they're expecting a revenue profile of 2,000 crore from this particular acquisition over the course of next 7 to 8 years, and they've valued the company basis the growth potential, and they're expecting that the volumes will go up to 1 MMSCMD over the course of next 7 to 8 years versus 1 lakh that we are seeing at this point of time. Separately, Adani Group of stocks, they continue to buzz after that. GQG partners have bought stake worth 15,500. So the stocks are up anywhere between 5 to 15% in the trading session today. Britannia, however, is down in trade today. It's down almost 2%. That because CLSA has downgraded the stock to from underperform to sell with a target price of 4,060. They've cut the FY23 and 25 earnings by anywhere between 1 to 10%. Because they believe that the commodity inflation is likely to be sticky, at least when it comes to the agro world, and that is likely to impact margins as well. In fact, let's go across to my colleague Vinny. She's standing by to talk to us about Britannia in greater detail and why CLSA has a sell call on that one.
Absolutely. They have downgraded the stock. They've downgraded it from underperform to sell for Britannia and given a target price of 4,060 rupees per share. Surely we are seeing that pressure building in the stock today. Now, other than that, let's not forget raw material prices like wheat and milk prices, which account to Britannia's key raw materials, that has seen a sharp increase even in the last quarter as well. And on the back of that, they expect that this high inflationary pressure coming in here will continue to come on the margins for the company as well. And that impact on the margins is something that is why they're cutting the FY23 to FY25 earnings by 1 to 11% on the back of these inflationary trends. Other than that, they expect that the top line growth for the company this time will be more driven by volume. Previously in the last year, we had seen it was more of a pricing-led growth. Maybe this time around we could expect a volume-driven growth for the company. So yes, an underperform sell rating, I beg your pardon, coming in from CLSA for Britannia.
Thanks, Penny, for that. In fact, Kunal, what's your take as far as the chart of Britannia is concerned and the other FMCG names, ITC, Nestle, etc.?
So I think out of the lot, only ITC is the one which is strongest. The stock has been a strong performer. The likes of Nestle, Britannia, HUL, Dabur, etc., these stocks are languishing below their long-term averages. And in fact, most of these stocks have broken their long-term averages just about last week or so, which means that the correction is very ripe into these names rather than more of a mature correction phase for these stocks. So that generally indicates that the sector may not perform or get into any kind of a major outperformance. You've neither seen a major short built up happening into the sector. It's more of unwinding of long positions, and typically when we see unwinding of long positions into these kind of stocks and sectors which are typically low beta as well, we expect that these stocks as well as the sector gets into a time-wise as well as a price-wise drag, may not be a sharp correction. So will not be too much enthused into buying the other names from the FMCG pack. The only one is ITC, but I still believe that at 370, 365, that's a very good level to buy the stock on dips.
Okay, so ITC remains a buy at 365.70 levels because there are levels of perhaps 400 coming on that counter. But we are talking about MGL and how that's the top gainer in the F&O basket. Let's listen into what the management had to tell us with respect to the latest acquisition.
We expect that going forward in 7 to 8 years' time, the demand is going to be around 1 MMSCMD or slightly more than that. What we are seeing is the future growth potential in the company, and going forward, if the volume goes up to 1 MMSCMD, the top line would be close to 2,000 crore plus, and also the profits will be coming up very soon. I mean, EBITDA margins are expected to be positive this year, and next year onward, it's going to pick up as the volume grows up.
Okay, in fact, Devin, do you track the city gas distribution companies closely? And if yes, what would be your top pick, MGL, IGL, etc.?
Obviously, I think the one who is moving faster of the lot is Adani Gas. They are adding new cities into the circles, and probably I think the volume also is suggested to get double in a shorter period of time from now. The bigger challenge remains not the distribution. Distribution possibly might get completely absorbed, I think, because of the higher demand and the replacement which is happening to the conventional fuel. The bigger challenge remains with the cost, and I think that's where the affordability issue comes in. Today, because of the rise in the prices of the gas, the distribution is happening at a higher cost to the end consumer. And as a result of which, I think the end consumer is finding it difficult to adjust, particularly the bulk users like industry users, difficult to absorb this kind of a cost. As a result of which, there is a good amount of margin pressure getting applied if you are not a scaled player. In my viewpoint, I think as far as the domestic use of gas is concerned, the cost is passed through. But as far as industrial use of gas is concerned in the distribution side, there remains a challenge. Given that uncertainty, probably I think I'm not very particular about looking at this particular space. I would rather like to look at it, I think, once we see the visibility of stability into the oil product prices.
So not the best sector to look at this point of time, lower in the pecking order for Devin, because there are better opportunities available in the market. So let's look at some of those other stocks which are seeing quite a bit of traction and moving on high price volume as well. First Source Solution is the stock which has seen breakout from a downward sloping resistance trend line as well. It's trading above all its key moving averages, and today in fact all the mid-cap IT companies are doing quite well. That stock holding up comfortably in the green. You also have Swan Energy, which has seen a breakout from an 8th session consolidation. It's surpassed the 100-day moving level as well, and has snapped the 5-week streak of forming lower highs. So that's the word coming in as far as Swan Energy is concerned. The flashes for you on the screen are talking about First Source, and we'll get Swan Energy for you shortly as well. Finolex Cable is the last one that I wanted to talk about because it's hit an all-time high on an intraday basis. It's been advancing for 6 consecutive weeks, and the volumes today as well 3x the 20-day moving average. So quite a bit of traction on that one as well. Naresh, your take as far as Finolex Cables and Swan Energy is concerned? Would you be a buyer in any of these names?
So Finolex Cables is something which I covered at 550 levels, and now we've actually booked profits today totally across the board. Been booking profits from 700 levels. The stock has moved up from 550, 600 levels to 780 at current prices. The risk reward is not great at 780, 800 levels. Yes, the stock has made a new all-time high today, much above the 2018 levels. But a dip back to 650 is where one would get interested. I would expect it to go sideways for some time now. So time to book some profits in Finolex Cables, not a buy. Swan Energy is something which I don't track purely for the reason of volatility. The stock has made, say, up and down moves in a very wide range. So the stock goes from 340 to 200, then back to 380 to 240. Very difficult to trade this one, so a total avoid.
Okay, so that's the take coming in on Finolex Cables. Have been booking profits on that particular counter. But you know what? The talking point in the market is also the fact what the weather predictions are and whether El Nino will have an impact on the food production this year or not, because that in turn will spur inflation, and then that will cause more monetary tightening. We tried and understand the view coming in from the Food Secretary as to what the impact could be on the production and how they are gearing up, if at all, that gets impacted. Listen into the comments coming in from the Food Secretary.
While the temperatures are a little on the higher side, but as of now, there has been no impact on the wheat crop. The wheat crop is healthy. And what we are told is that the temperatures are not likely to increase to a level which would impact the crop and impact the grain. So we are hoping and we are looking forward to a record bumper harvest this year of almost about 112 million tons. We have no indications of any kind of a monsoon issues. There are reports, but as I said, these reports have come in the past and not really proved correct. So we are waiting for more certain estimates with regard to the monsoons, and as and when we have the estimates of the monsoons with us, we will take corrective measures. But then, as I said, as of now, there is no cause for alarm, no cause for worry. The food stocks are very comfortable. The prices are now coming down of the various agri commodities. So I think the country overall, I think, is in a fairly comfortable position with regard to the food grains.
Devin, what's your take as to how the rural economy is shaping up, and what are the chances that El Nino actually derails the rural economy recovery that we are seeing? Is this a big factor that the market is watching out for very closely?
I think the impact of El Nino, I think, would be more told when probably we see the actual situation panning out, if at all it is. The track record of this prediction is equal at this point of time as I read it, because I think whenever in past these agencies, whenever they made the projections, 50% of the time I think they have not met with those projections. So I think I would not probably speculate at this point of time on the impact of El Nino. However, I think more importantly, leave aside I think this particular aspect. More importantly, the rural economy in India is progressing well. I think the last crop which the rural India has produced has fetched reasonably high amount of revenue to the farmers, and the distribution income available in hands of people is definitely, I think, resulting into higher amount of spend. At the same time, I believe that there are many protective mechanisms which the government has built in case of crop failure, etc. So that would probably not create any kind of social trouble as far as I think this economy is concerned. Overall, on the corporate sector, my take is that I think at this point of time, it would be slightly early to speculate. But given the track record of the government, I think they would prepare themselves in advance, make sure that I think food products prices do not go out of reach of common man. And at the same time, I think would like to believe that most of the corporates also would, I think, position their products and the production in light of, I think, this development, if at all it happens. So not speculating anything at this point of time, do believe that the consumption in the economy is intact, and would like to believe that I think going forward in a normal monsoon situation, economy will bounce back and bounce back very, very strongly.
Okay, let's get in some BTST ideas as well going before we wind up for the day. Kunal, let's start with you.
So I'll suggest a couple of buy calls over here. The first one which I'm suggesting is a buy on one of the gas names, that's GSPL. Targets of 310, stop loss to be kept at 280. Power Finance has been a stock which I've been bullish on earlier. 160 was my earlier target. Those targets have been met, so traders could look at a fresh trade from current levels for Power Finance. Targets of 168, stop loss at 157.
Right, Nuresh, what about your BTST trades?
So two power names. First is a buy on Tata Power with a stop loss at 208 and target price of 220. Second is a buy on NTPC, very close to a new all-time high on a dividend adjusted basis. Expecting a move towards 185 to 190 in the near term. BTST target of 182, stop loss at 175.
Both of you are picking up power names, and in fact I remember in a conversation with Rajiv Jain, he also talked about how he's quite positive when it comes to NTPC as well as bullish on the entire power sector. In fact, if we have that bite, we can play that as well with respect to how he's bullish on NTPC. So of course, infrastructure is one theme that he's betting big on, and that's why they've invested into Adani Group of companies. But NTPC was the other stock that he flagged off, that they have exposure to that particular company and hold stake in that as well. We'll get to that bite in a bit, but before I do that, let me go across to Devin and try and understand. Devin, would you be a buyer on some of these power companies at this point of time? If nothing, at least it provides a good dividend yield.
Yeah, I think from the valuation perspective, it's a good pick for particularly for the long-term investors. I would not encourage the people who are taking positions for a few months or a year or so to buy into this space, because then they may get hurt with the kind of volatility into the energy scenario. In my viewpoint, I think the long-term investors like insurance company, pension funds, endowment funds, sovereign funds, those investors, whether in India or outside India, they would probably look at this sector very favorably because of the growth associated with this power generating companies. I think we are clearly seeing a good amount of roadmap ahead for at least next 25 years from these companies. So given that strength, many of the long-term investors which I mentioned would be the ones who could possibly pick up these companies if the market gives opportunity at corrected price and the down level.
And as I mentioned, one such long-term investor is GQG Partners, who is looking at NTPC and other companies. Let's listen into their rationale as well.
If you were sitting here in 2005, SBI used to trade at 15-20% premium for foreigners. Foreigners couldn't buy at the market, by the way, right? So like everything else in market, that is the sentiment is cyclical, and I think in our opinion it'll change. But the good news is the way we think about it, that our job is to get earnings growth and the dividend combination right. If the valuations increase, that's wonderful. But even if they don't increase, we should be able to compound at double digits. So that's how we think about it. So we don't wait and hope for others to agree with our view. maybe they never agree. But in the meantime, the earnings growth plus dividend gets us to double digits. We are happy owners.
You've always insisted that market price is a function of EPS into PE. PE is perception, EPS is growth. In Indian market, where do you think there is scope for PE expansion as well as EPS expansion? And where do you think there is scope of only EPS expansion and no PE expansion?
Yeah, I think the second bucket, you'll get the companies like Nestle's of this world. I think these companies will continue to deliver, but Nestle, I don't know, 70, 75 times, something like that. Earnings, I've kind of lost track. And Nestle, as you know, was a large position for a long time. So could they be deteriorated as the earnings growth shifts away to other areas? Because you have to look at one aspect. Over the last decade or so, globally, earnings growth was on a slower side. So a lot of these defensive type businesses were re-rated because investors look for growth, including us, right? So growth was scarce. Now, and interest rates were low. So you got a bubble in tech, not so much in India, but elsewhere. On the first bucket, look, I think we talked about some of those. I mean, State Bank of India, why does they have to sell at 8 times earnings? Because I think they'll grow at mid-teens plus earnings. So could they deliver those returns? If they keep delivering those returns, could the multiples be higher? I think so. In fact.
Okay, that's the word coming in from Rajiv Jain, and not his opinion on Adani, but his opinion on many other sectors and themes in the market. Devin, just wanted to understand, where is it that you're hunting in this current sedate market, if at all you're recommending buying anything right now?
So I think we continue to look at the areas which we have selected, particularly consumption up was maximum. And we believe the commodity is the one space which we would like to keep ourselves little away from it. In the manufacturing and in the consumption, I think we prefer the industrial consumption through large size manufacturing companies, which are largely engaged in supply to the market requirements of renewables and the power or the capital goods investment. And I think mid-tier IT companies which are playing a specialized role in developing some of the niche tools. They are also the ones I think which we like to buy. The banks, particularly the private sector banks, which are continuing to grow at around 20% rate of growth in respective segment of credit lending, be it in the lending of corporate lending or of retail lending or housing finance lending, and who are basically in a much better position to manage their liability side by higher CASA ratio, are some of the areas where typically we look at, I think, the businesses. Plus, the rollout of various technology platforms, including 5G, is also suggesting that I think some of these companies which are the key players in rolling out are the ones I think cannot be neglected, has to be bought. Few of the defense name also stands in our list of investment portfolios, where we believe that they have relatively better clarity about execution of the business. So yes, select IT companies, select banking and financial companies, select manufacturing companies who are engaging in capital goods, and also I think defense and railway category suppliers. I think they are some of them are in our portfolio, and we continue to accumulate them.
Devin, great to have you on the show. Thank you so much for taking the time out and joining in. Excuse me. Let's begin winding up for the day. We couldn't quite hold on to that 17,800 print, but nonetheless, we're closing in with a 100-point gain, 106 points higher for the Nifty futures. 17,778 is where we're shutting shop for the day. Sectorally, it's autos, cap goods, oil and gas, which was a big mover today. Power as well as technology, along with financials, which have actually held out okay. Banks fell flat towards the latter part of today's trading session. Cement, media, metals as well as realty were the ones which closed in the red. Let's talk about some of the large caps and what actually held out first. So Adani Enterprises made a good comeback, although from the high point of the day, the stock has come off quite considerably, but still closing in with a 5% gain. Tata Motors, a 3% uptick coming in there. 442 is where the stock shut shop for the day. ONGC, NTPC, Power Grid, Bajaj Finance, Infosys, Asian Paints, HDFC and ITC have all been some significant winners today. On the flip side though, there were losses for Britannia, for Tata Steel, ICICI Bank, which has closed in flat. L&T has closed in with marginal losses. IndusInd Bank, Bajaj Auto, Hindalco and Ultratech as well have been a little bit soft. But a lot of movers from within the broader end of the market, besides of course the Adani group of names which sprung up quite smartly. There was also Motherson Sumi, which held out. There was Manappuram Finance with a gain of about 4.25%, FSL, which has gained 5.25%, and then MGL has been right at the top of the pack with a near about 9% move today, given their first ever acquisition, and that's something that the market is liked. So 9% higher and counting still for MGL. Z did not have a great day today. Ambuja, Jindal Steel and Dalmia Bharat also have all been losers in today's trading session, but the overall breadth of the market has managed to close in favor of the advances. That's pretty much it then. We'll pick it up for trade tomorrow morning at 8 a.m. For now, oh yeah, how did I forget? Yes, tomorrow is a trading off, so happy Holi to all of our viewers. We'll see you again on Wednesday morning, day after.